You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Hey everyone, and thanks for joining us for the deep dive.
Good to be here.
Today, we're really cutting through all the noise, digging into the latest market and geopolitical briefing. We want to unearth what's really happening out there.
Exactly.
Our mission, really, is to take what looks like this, scattered collection of global events, new trade tariffs, subtle currency shifts, even military movements.
Right. Things that seem separate.
Yeah, and show you how they're not just happening in isolation. They are, in fact, deeply interconnected, shaping our world in ways you might not immediately realize.
That's right. Think of us as your guides today as we connect these crucial dots. We'll be navigating everything from, the intricate world of foreign exchange
FX.
and commodity markets to the often tense realm of trade policy and the ever-shifting landscape of global geopolitics.
A lot to cover.
Definitely. And our goal is to move beyond just telling you what occurred to really understanding why these events matter, how they influence the global stage.
Yeah, maybe what it means for you, the listener.
Precisely. What their ripple effects could mean for you.
Okay, let's unpack this then. And we're going to start with, I think, the intricate, often high-stakes world of global trade.
Good place to start. It sets the stage.
Because what happens with goods and services flowing across borders, it really does set the stage for so much else, doesn't it?
Absolutely.
Right now, we're seeing this fascinating, almost contradictory tale of two speeds in global trade policy.
A real contrast.
On one hand, there's a clear escalation of tension. China has just announced new anti-dumping duties on certain U.S. optical fibers, effective immediately.
Wow. Okay. Immediately.
Yeah. This isn't just a minor skirmish. It's another deliberate point of friction, adding to that already fraught trade relationship between the U.S. and China.
This is a really pointed move, and it's fascinating to see how targeted these measures can actually be. Anti-dumping duties are specifically designed.
Right, to counter unfair pricing, is that the idea?
Exactly. What a country perceives as unfair pricing, in this case against U.S. optical fibers, and their immediate implementation signals a clear escalation.
And optical fibers. They sound specific, but they're important. Wow.
Oh, absolutely critical. They're in everything from high-speed internet infrastructure to advanced medical devices, even defense systems.
So this could actually impact, us?
It could. I mean, for you, this could mean that the next time you're looking at an advanced piece of tech, the supply chain might have shifted, potentially leading to higher costs or maybe new sourcing strategies as companies try to navigate these tariff walls. It's a move that highlights a strategic reevaluation of dependencies.
Forcing industries to look elsewhere.
Or even reshoring some production, potentially. Looking for alternatives, definitely.
Okay, so that's one side. But then on a completely different note, almost the flip side, we have a much more positive development unfolding.
Yeah.
Japan and the United States are reportedly in the final stages of talks to significantly reduce tariffs on Japanese auto imports. It almost feels like a deliberate balancing act against those U.S.-China tensions, doesn't it?
It really does. Interesting timing.
We're actually expecting an agreement within the next 2 weeks, pending a presidential executive order.
So, quite soon, potentially.
Seems like it. Beyond that, both sides are also prepping a joint statement on their July trade accord, plus a memorandum outlining Japan's planned investment package.
It absolutely does feel like a strategic chess move, and this is where you really see the deeper game playing out, I think.
Oh, so?
Well, these bilateral agreements aren't just about fostering immediate trade. They're about creating a more reliable supply chain, an investment environment for key allies. In a world where trade relations are increasingly, let's say, weaponized, strengthening ties with trusted partners like Japan creates predictability, a sense of strategic stability.
Diverting investment from riskier areas.
Potentially, yeah. Diverting capital and manufacturing away from regions with higher trade friction. For you, the listener, This could mean maybe lower prices on your next car.
That'd be nice.
But also, it's a signal, right? A signal of where long-term economic power and partnerships are being solidified. That influences everything from jobs to tech collaboration.
And that Japanese investment package.
That's key, too. It isn't just a gesture. It's a concrete commitment to enhancing these economic ties. It goes beyond just tariffs to support broader cooperation and growth.
Creating a more integrated economic sphere.
Exactly. More resilient, more integrated.
So we've just unpacked this tale of two speeds in trade. Friction in one area, cooperation in another.
A real divergence.
And it's those very shifts in trade policy, the tariffs and agreements, that send immediate ripples through the global economy.
Right. Which brings us to currencies.
Directly impacting the incredibly dynamic world of currency markets. Because ultimately, money follows goods, doesn't it?
Or anticipates the flow of goods.
Yeah. Here's where it gets really interesting as we look at how the major players are performing today.
Okay. Let's look at the dollar first.
Yeah, the U.S. dollar, for instance, is currently edging higher. This rebound comes after a recent period of weakness.
Tied to that softer labor data we saw.
Exactly. Softer U.S. labor market data. Now, the market's focus is squarely on a fresh round of job metrics that are coming out, along with the ISM Services Survey. That's the Institute for Supply Management's gauge of the service sector.
A really important one. Big chunk of the economy.
Huge. And these will be watched very, very closely for signs of how these broader trade tariffs and the economy in general are filtering through.
Precisely. And these specific U.S. data points, jobs, ISM services, they're critical indicators not just for the U.S., but really for the global economy.
A pulse check for everyone.
Absolutely. They influence investor sentiment, currency valuations worldwide. The dollar's strength or weakness has profound ripple effects.
Like for tech companies.
Yeah, good example. U.S. tech companies earning revenue overseas in, say, weaker local currencies. Their repatriated profits actually shrink when converted back to a stronger dollar.
Right.
Conversely, for investors in emerging markets, a strong dollar means their dollar-denominated debts become harder to service.
Which could trigger capital flight.
Potentially, yes. Triggering capital outflows. It's this powerful current influencing investment and stability everywhere. It's fascinating how global confidence in the U.S. economy, even with trade tensions, can still drive dollar demand as a safe haven.
Interesting. And the dollar isn't the only currency with a story today, is it?
No, definitely not. What else are we seeing?
Well, the euro's remaining pretty subdued. It's holding below that 1.17 level. Markets seem to be looking past a softer than expected retail sales print from the Eurozone.
Okay, so not much reaction there.
Not really. The yen, though, initially under pressure, found some notable support.
After the U.S.-Japan trade news.
Yeah, exactly. After that news broke about progress on autos, a direct link right there between trade and currency.
Clear connection.
Sterling, meanwhile, is modestly firmer. That seems largely supported by comments from Bank of England officials.
What are they saying?
Stressing caution on easing monetary policy because of persistent inflation risks.
So worried about inflation there, okay.
Yeah. And meanwhile, the Antipodean currencies, that's Aussie and Kiwi dollars,
right.
They softened, even despite Australia reporting a strong trade surplus. This reflects that broader U.S. dollar strength we just talked about.
And this really highlights that complex interplay, doesn't it? Local data, central bank policies, and then this huge gravitational pull of the global dollar.
So good news locally might not be enough.
Sometimes, yeah. For the Australian dollar, for example, a strong trade surplus is normally fantastic news. Robust exports, healthy economy.
Sure.
But when the U.S. dollar strengthens globally, acting as that benchmark or a safe haven, it can just overshadow positive local data, makes other currencies relatively weaker.
Regardless of their own fundamentals.
Pretty much. It's this constant tug of war. Even seemingly good local news gets outmatched by bigger global trends and risk appetites. Critical factor for anyone in international trade or investment.
Impacts purchasing power, profit margins.
Directly.
Okay. So from the invisible currents of currency, let's shift focus now. Let's talk about the foundational elements. Commodities.
Right, the raw materials. Energy, metals.
The stuff that literally powers our world and builds our infrastructure. Oil prices specifically are lower right now.
Ahead of that OPEC Plus meeting this weekend?
Exactly. There were earlier concerns, that the group might raise output, which naturally put downward pressure on the market.
Sure, more supply usually means lower prices.
But Russian Deputy Prime Minister Novak has since clarified that OPEC's core producers are not currently discussing an increase.
Okay, pushing back on those rumors.
Yeah, he really emphasized that conditions and forecasts would be, carefully considered before any decision.
So caution is the word. Seems like it. Reports are even suggesting that if production curbs are unwound, it might happen very gradually.
How gradually?
Possibly over a year in very small increments, which would limit any immediate price shock, presumably.
Right. That suggests the market's almost neurotic sensitivity to even hints of production changes. It shows the delicate balance OPEC Plus tries to maintain.
Walking that tightrope.
Absolutely. Between maximizing revenue for members and not, stifling global economic growth. But what's even more fascinating here is that while they're discussing future output, maybe tweaking things slightly, Russia is making these huge strategic long-term moves.
Like what?
Well, Russia confirmed Rosneft signed a deal to supply an additional 2.5 million tons of oil to China via Kazakhstan.
Okay, more oil heading east.
A lot more. And they've also started work to expand the Power of Siberia pipeline.
The gas pipeline to China.
Exactly. These aren't just commercial deals. They are monumental geopolitical shifts.
Yeah.
They're cementing energy ties between Russia and China.
Potentially insulating them from Western pressure. That's likely part of the calculation, yeah. Insulating from sanctions or shifts in demand from the West. So even if OPEC Plus makes a short-term tweak, Russia's playing a much longer game here.
Fundamentally reshaping global energy flows.
For decades to come, potentially, reshaping energy security and supply routes.
Wow. Okay, beyond oil, we're seeing other commodity movements too.
A few things, yeah.
Precious metals, for instance, eased slightly. That looks like mostly profit-taking after gold hit record highs earlier in the week.
Makes sense. Natural pullback after a big run-up, investors locking in gains.
And base metals also slipped.
Yeah, reflecting weakness in Chinese markets.
The China connection again.
Always. The health of Chinese markets is such a direct and powerful driver for base metals demand. China's industrial appetite for copper, aluminum, you name it, it's massive.
So weakness there means softer prices globally.
Pretty much translates directly. It illustrates that profound interconnectedness, China's manufacturing health, and the value of basic commodities. It's a barometer for global industrial activity.
Okay, that brings us neatly, I suppose, to the complex, often volatile world of geopolitics,
where things get even more complicated.
This is where we see direct and indirect impacts on markets, on stability, all intertwining with everything else we've discussed: trade, currencies, commodities.
Absolutely all linked.
So what does this all mean for global peace and security right now?
Well, let's start with the Middle East. Tensions remain incredibly high there.
Always seems to be the case, sadly. What's the latest?
We've seen Israel carrying out a strike on Hezbollah targets in southern Lebanon.
Okay. Another cross-border incident.
Yes, a clear signal of their defensive posture and willingness to engage beyond Gaza. And the ongoing operation in Gaza itself, reports suggest it could last up to a year.
A year? Wow. That underscores the deep-seated, protracted nature of this conflict.
It really does. And these are profoundly serious situations with far-reaching implications. A prolonged conflict fuels instability across the entire region.
Affecting oil prices, diplomacy.
Everything. Global oil prices, the complex diplomatic calculus in Washington and European capitals, and the potential for broader regional escalation is a constant worry.
Drawing other players in.
Exactly. Other state and non-state actors might see opportunities. This isn't just localized, it's a constant pressure point impacting shipping lanes, energy supplies, refugee flows.
Which then ripple outwards.
Creating further humanitarian and economic challenges internationally. It keeps the world on tenterhooks, truly.
And then, of course, we have the ongoing Russia-Ukraine conflict. Multiple facets to cover there today.
Indeed. A lot happening on that front.
We've heard former President Trump state he will soon assess the state of U.S.-Russia relations.
Okay, signaling a potential review if he were to return to office.
And he's pledged continued American troop presence in Poland. Also indicated further phases of Russian oil sanctions could be coming.
Which would tie back directly to those commodity markets and Russia's strategic energy deals we discussed?
Absolutely. Moscow, for its part, dismissed the idea of security guarantees for Ukraine. Call them dangerous for Europe.
Sticking to their position there.
And they've denied any involvement in that incident involving European Commission President von der Leyen's plane.
Right, denying that.
In another significant development, President Putin met with North Korea's Kim Jong-un in Beijing.
Ah, yes, that meeting.
Both leaders reaffirming their military and political cooperation.
That's a big one. We'll come back to that.
And on the diplomatic front for Ukraine, President Zelensky is expected to meet with the U.S. envoy in Paris soon.
Okay, diplomatic channels still active.
While France and his partners continue discussions on possible security guarantees, but tied to his ceasefire.
Right. What's truly fascinating here is the sheer density, the layers of diplomatic and military maneuvering from all sides.
It's complex.
Very. Trump's statements signal potential shifts in U.S. foreign policy, a reassessment of alliances, maybe a tougher line on energy sanctions. That could destabilize oil markets further.
And Moscow's rejection of guarantees.
Highlights the deep chasm, doesn't it? Shows the lack of common ground for a lasting peace. But maybe one of the most significant developments is that Putin-Kim meeting.
Why so significant?
Reaffirming military and political cooperation. This isn't just a photo op. It's a tangible strengthening of, well, an authoritarian axis.
Meaning what, practically?
Potentially North Korean arms for Russian resources. It challenges Western alliances, global non-proliferation efforts. It definitely adds to global instability, especially in Asia.
So this complex tapestry of events, sanctions, alliances, diplomacy for a ceasefire.
It all contributes to an incredibly volatile geopolitical landscape, fundamentally reshaping international relations. Underscores why monitoring any progress towards de-escalation is just critical.
So we've covered a tremendous amount of ground today, haven't we?
We really have. Lots of moving parts.
From that ongoing dance of trade policy, the tensions, the breakthroughs, to the sensitive pulse of currency and commodity markets.
Right.
And those persistent, often volatile pressure points in global geopolitics. What we've seen time and again is these aren't isolated events.
No, they're all interconnected threads.
In this vast global fabric, constantly pulling and pushing each other.
And this raises an important question, I think, for you, the listener, to consider long after this deep dive.
Okay, what's that?
How might these upcoming U.S. economic data releases we talked about, combined with the outcome of OPEC's critical meeting this weekend, and the continued evolving geopolitical flashpoints we've highlighted, the Middle East, Eastern Europe,
how might all of these factors fundamentally alter the global economic and political landscape in the coming months?
A lot of uncertainty there.
Huge uncertainty. Will we see a strengthening of new alliances, further fracturing of trade relationships, or maybe, unexpected opportunities emerge from this complex global dance?
It's about looking beyond the headline, isn't it? Understanding the why, connecting those dots yourself.
Exactly. Stay curious. Keep exploring. Keep thinking about how these global forces truly shape our world, because they certainly do. Thank you for joining us for the deep dive.
Thanks, everyone.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.